Just let me know if you're dressing up. I'd love to see what people are doing. I really enjoy Halloween and giving away candy at the door. But let's get into it, folks. Let's talk about a housing crash and exactly how a housing crash is set up. I do believe there is a country where you could theoretically say the dominoes are lining up to mirror the great financial crisis. Let's also talk about Meet Kevin and Meet Kevin's call of a low interest rate. We will get on to that in a minute. And of course, we got to share with you Case-Shiller and FHFA home price information because, again, it is both shocking and also out of date. This data is from August, I believe. So again, let's not pretend this is November information. But let's get into it, folks. Let's talk about a country, and in this case, it is Canada. This is according to RBC, Royal Bank of Canada. Royal Bank of Canada estimates that 60% of their mortgages face a payment shock over the next 3 years. So what are the numbers behind this potential payment shock? According to RBC, credit losses could rise significantly by 2025. Why is that? Well, according to RBC, in 2024, $186 billion of mortgages reset, and the average payment shock is 32%. So think about that. You have a $2,000 mortgage, it is now $2,600. You have a $3,000 mortgage, it is now $3,900. It gets worse. It gets worse from there. In 2025, there are $315 billion, roughly 50% more than the year prior, $315 billion of resets, and the average payment shock is slightly worse at 33%. Folks, if you don't remember the great financial crisis in the United States, it went something like this. Everybody got hot and bothered in housing. You couldn't miss. Everybody couldn't make it work with 30-year money, so they got adjustable rate mortgages. Those adjustable rate mortgages got even worse with pick-a-payment loans. And pretty soon, 51% of loans were adjustable rate mortgages. That was the 2005 vintage. Many of them had 2-year durations. So they popped or reset in 2007, which at that point they were not affordable. Now, in 2007, a lot of the mortgages in the United States that were toxic doubled. So they went up 100%. In this case, we're talking about Canada going up roughly 33%. So not nearly as shocking and disruptive as a 100% payment shock, but still significant. Have people's paychecks risen 33%? Of course not. Have they risen some? Yes. I don't suspect that 33% will be enough to send Canada into a cascading supply of distressed sellers and people losing properties. Not a big wave, but don't get it wrong. There will be plenty of people that are becoming forced sellers because they can't afford the payment. And again, to have a housing crash, you need wave after wave after wave of supply into fixed or reducing demand. That was the global financial crisis. That was U.S. residential real estate. It could be set up in Canada, but that is, again, according to RBC, Royal Bank of Canada, the greatest pain will occur in 2025. So we're still, I don't know, somewhere between 14 and 24 months away. So again, something to think about. Again, average payment shock being 33%. That's I mean, I don't think anybody, myself included, would want my payment to go up 33%. That would not be good. How about Resi Club, man? Lance Lambert in Resi Club is doing amazing jobs. In their free newsletter, he summarized what Goldman Sachs and Wells Fargo are talking about, key metrics that you and I care about. There are a lot of them. I only captured a few. We'll talk about what Goldman and Wells Fargo think about 2023 and 2024. And again, this is just a taste. Go to resiclubanalytics.com, put in your email. You will get these emails every day just like I do. All right. How about the unemployment rate? Unemployment rate's important, right? The Fed has gone up 525 basis points. They're trying to get the unemployment rate up. They're trying to make the job market a little less strong. Well, according to Goldman Sachs, they see no change from 23 to 24. They are holding tight at 3.6% unemployment, below 4. What about Wells Fargo? Wells Fargo, kind of the opposite. They see 3.6 this year, but they see 4.2% next year. Interesting. Well, what about the 10-year note? You and I have seen the 10-year note race to 5%. You've then have seen mortgage rates go to 8%. What does Goldman think about the 10-year note? Goldman thinks it will be 4.3% in 2023 and again 4.3% in 2024. So no change. Higher for longer. Wells Fargo, again, very different than Goldman, sees 4.08%, so quite a bit down, 15% lower than this morning, and 3.73%, so about a quarter point lower than today. What about the 30-year mortgage? This is something we all care about, right? 8% for home buyers, 9% for investors. Goldman Sachs is calling 7.1 for 2023 and 6.8 for 2024. Wells Fargo, a little bit more aggressive, 6.94 for 2023 and 6.39 for 2024. So as you know, I think you've heard me tell you, I think we'll be at 6.5. So Wells Fargo is even ahead of me. But finally, tell me about home sales. We are in a housing recession. More on that later. Goldman Sachs thinks we'll do 4.1 this year and 3.8 next year. Who else is calling 3.8 million? Yep, yours truly. Wells Fargo, probably because they see lower rates, they think we're going to do 4.2 million this year and 4.4 million next year. I don't know how we get to 4.4. And again, remember, these are existing home sales, not new home sales. New home sales was in a completely different category. But again, I thought that was interesting. Go to resiclubanalytics.com, put in your email. You can get daily, or at least 5 days a week, free emails from Housing, Lance Lambert. All right, time to talk about Case-Shiller and FHFA. We get monthly updates on home prices, just like every month. Remember, this is August data. Folks, it's like November, right? It's November tomorrow. So I think it is fair to say that the November housing market is not as robust as August. So I'm going to give you the data, but to think that data relates to November housing, it's almost unimportant. But given that we talk about housing here, we might as well hit it. Case-Shiller up 1% month on month and up 2.16% year on year. Yes, folks, the Crash Bros are officially wrong again. They need to talk about 2024 and 2025. FHFA up 0.6% month on month, up 5.6% year on year. So even if we have a slowdown at the end of the year, housing will be basically flat for the year, which is what we called on this channel way back on January 2nd. Transactions going sub 4, prices were flat. It's almost time to celebrate because we got those right. But we'll wait a couple of months and see what happens. Let's talk about the housing recession. It is comical to me. This is really funny to me. You and I have been talking about what we call the 53-year spreadsheet, which we give free on our website, onerentalatatime.com. It's the lower right box of the 8. Because we saw the 80s housing recession. That's what we called. We said that's the setup we have. Rates went up 500-600 basis points. What happened to housing? Well, it went into a recession, and I would argue a depression. We are right back there. We not only have housing recession by Wells Fargo and Goldman Sachs, we also have Fortune talking about a housing recession a la the 1980s. We are going back to the future. Folks, if you want to understand where we're going in the next 2 to 5 years, please review housing in the 1980s. Transactions crashed. Creative financing exploded. Some people have to sell, but there was a lot of lock-in. Turnover really slowed down. That is the metric that is going to show just how broken the housing market is. The housing turnover usually is about 7 to 8%. We are going sub 4%, which just means the average person is staying in their home longer. That is what we are going to see. The housing turnover, frankly, is crashing. It's going to collapse 50%. And as an industry, as an economy, housing is a big part of GDP. We are already seeing transactions fall and going lower, but now we're going to see new development, residential investment fall. Builders, medium and small, have stopped. Big builders are blowing out remaining inventory and slowing down. They don't like to take, do the interest rate adjustments from 8 to 5.5 or 5%. That's expensive. They're going to slow down. We are going to see housing be negative on GDP for several quarters going forward. All right, meet Kevin. I don't know if you guys have seen this. I don't know if you follow him. I don't know. But I was sent a video yesterday or the day before where Meet Kevin is saying, and this is hard for me to hear, but this is what he believes. He believes that the 30-year mortgage rate in the next 10 years, so he's given himself a pretty wide window, will be 1.8%. 30-year fixed. 30-year fixed, folks, going below 2%. So when I hear that, I don't know, I get a split personality. First, I think what would have to happen in our economy, the US, the global economy, to cause rates to go that low? It would be something bad. Probably really, 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 really bad. But that's one thing. And then I think what would happen to asset values? If we go back to risk is zero, don't all asset value, all hard assets go up? Didn't we learn that in the last, 2 or 3 years? So I want to ask you, on a scale from 0 to 100%, 0 to 100%, I want to ask you, what percent chance do you think we see 30-year fixed rate money at or below 2%? Meet Kevin says 1.8, I'll go up a smidge. What are the chances sometime in the next 10 years, between 0 and 100%, we see a 2% 30-year mortgage? Do me a favor, leave your comments below. I would love to hear from you. And then finally, folks, we have day 7 of our boot camp this Sunday from 8 to 10. I think I still need to send that invite. I need to do that today. Let me write that down. I didn't do that yet, I don't think. Thank you for reminding me. I almost forgot. I need to send that out to the boot camp. 8 to 10 this Sunday with the lumberjack landlord talking about, oh my God, I'm a landlord. Now what? You can also talk to him about house hacking. You could talk to him about getting started with as a ninth grade dropout, all of those things. Also, the Best of ORAT has all day 4, day 5, day 6, day 7 coming. So again, go watch Best of ORAT. Give me some hours watched. Subscribe. We need 4,000 hours and 1,000 subscribers. And I would greatly appreciate it. We got 93 spots left for our exciting event in Vegas. I hope to see all of you there. I hope this sells out quickly. $199 gets you 2 full days, 12 different millionaire speakers that grew this channel, 250 folks in the audience. President's Day weekend, you can fly home Sunday. It's going to be a party. We'll show you a concert from the Broken Spectacles. $200, pretty cheap. You need to be there. No excuses. You need to be there. But let's congratulate someone who did the work and frankly has been doing the work a while. Kyle. Kyle, you have gotten your golden ticket and 4 additional cards. Kyle, you've been doing the work for quite a while. You just sent me a note that you just closed on your 5th deal, but it is time to recognize your execution. You are getting your 5 postcards. Again, folks, if you want one of these, you close a deal, you close your first one, you get a golden ticket. You close your next one, you can get as many of these as you would like. So again, Kyle, congratulations on your 5. They will go out in the mail momentarily. All right, folks, take care. I hope to see you in Vegas. 93 spots left. Bye.